30 cents a share, 3 cents deeper than what Wall Street was looking for. And look at that, compared to a profit of 33 cents a year ago. So this is a stock that has really fallen on hard times. And as they are attempting to move back into profitability, they announced a number of major steps today. They will cut 10,000 jobs, or 10% of their workforce. They will take a charge of between 1.2 and 1.6 billion, and they say that that should save them $2 billion going forward. They also said that in addition to that 10,000 jobs, they're going to shift 6,000 jobs to contract manufacturing, and they also said they are targeting plants in Oklahoma City and Columbus, Ohio for shutdown here. Now, this is one of the most widely held stocks in the United States, according to Merrill Lynch. There have been a lot of investors who have been trying to buy this stock on its way down, trying to figure out when was a good time to get in, and many of them got burned, as Lucent warned time and time again, and that stock is down, I believe it is 63% over the past 12 months. Big losses there, and so many times people said, well, Lucent, you can see it on the way down. It's a $30 stock. How can you go wrong? It's a $20 stock. How can you go wrong? Well, look where it is now. So my question for you then is, at what point do you think it was a good value? Did you try to get in too early on this one, and is it a good value now?
Well, we owned it probably in the mid to lower 20s. A good time to buy would have been December 31st, because even though, as you said, it's down over 60% over 12 months, year to date, I believe it's probably up 40% or 47%. I don't have the actual number now. So if you had bought it when everyone was doing their tax loss selling, you would be smiling through all this. I think that Lucent has a good collection of assets. I think that it's going to be a survivor, will be a company in existence going forward. But I do think that management probably will change, and that probably be the catalyst to really take this stock higher. I think they just missed the optical move here, and they're trying to get into it, and they're late, and Nortel Networks ate their lunch. So I really think that what you're going to see going forward is you'll see management at some point exit, and someone else, go in and take the stock higher. We still own it.
Do you think that Henry Schacht can help engineer this turnaround? He doesn't seem to want to leave until he sees some changes there, and of course he was there at a time when they weren't really doing this kind of product demand.
Right. Yeah, I think he can help, but I think overall you're going to have to know who's going to lead this ship the next 10 years, as who's going to take them through the move to wireless, the move into optical. And they really just missed the boat. And that happens sometimes. When you are the market leader and you own a space, you're the last one to realize that you are the buggy whip manufacturer. And I think that's Lucent is kind of a factor of having that happen to them.
There was a lot of talk, has been a lot of talk about a brain drain at Lucent, sort of apart from the management issues.
Sure.
How much is something like that a concern? And then secondly, when you look at a possible restructuring play, how do you evaluate what's a useful move and what's sort of more window dressing?
You have to some of it you're doing on faith. I mean, you're really going into a situation like Lucent. You're looking at the assets. You want to know whether or not this collection of assets will hold up and will allow it to get through this bumpy ride. And if you're able to see that, then you might be comfortable holding the stock. You don't know. I mean, right now, whenever a company's cutting costs or laying off employees or restructuring, they're telling you that we haven't gotten it done, and we're trying to make certain, first and foremost, that we survive. We do have a plan going forward, but they're not certain themselves whether or not that plan is going to take them to the next level. And at a certain point in time, the board of directors generally steps in and says, okay, guys, enough. AT&T is probably going through the same thing.
Do you buy Lucent here?
I would. I mean, I own it. We bought it a little bit higher. They have, once again, misled the street a little bit. They were 3 cents lighter than they put forth. But again, that's not surprising. When you have bad news, you spoon feed people. Exactly. And I think that when it really goes up strongly is going to be when they hit their earnings for 2 consecutive quarters. It might come down here a little bit, but no one would have thought that it would be up 40% since December 31st, and it is. And I'm glad that we held it.
They're spoon-feeding castor oil there.
That's true. Jennifer Westhoven, thanks very much. And we are going to be coming back with Eugene Profit and some more of your phone calls. So stick around. You're watching Talking Stocks on CNNFn.
What you think of Juniper Networks? I've seen it take kind of a wild ride from over 200 to under 100. Now it's trading today about 134, I think. And I'm wondering what your forecast is, target for the next 6 to 12 months.
Okay, I wouldn't have a target on Juniper, but I would be a buyer of Cisco. I'm more partial, as I said. We're a larger company that's been there. In a slowing environment, they tend to perform a little bit better. However, that being said, Juniper definitely is a leader in its space. And I think we were talking about innovative companies before. It's going to be one of those companies, I believe, that will survive and do well. You may not see that $200 price that you were talking about for quite some time, but at the same time, I think that most of the bad news, these stocks going down, probably has already occurred. And so if I owned it, I would hold it.
Romer in Florida is next. Go ahead. Go ahead.
Hello?
Hi,
Yes.
Go ahead. What's your question?
My question is, I'm going to be 74.
Uh-huh.
I'd like to know what the distinctions would be between having CDs or mutual funds or stocks. Which would you recommend for a guy like me who is just about out of time?
Okay, that's a very difficult question. I'll try to take it in parts here. 74, you're in retirement, and I assume you're going to be using some of your portfolio to retire on. Because you said CDs, that's probably the most conservative, lowest risk investment out there. I think without knowing anything else, I would probably recommend that you leave some of the money in CDs, maybe take 25 or 30% of it and put it into an index mutual fund to ensure that you're able to have a portfolio move up with inflation. And I think my best recommendation would be to have someone who you're comfortable with really sit down and give you, advice that's specific directly to you.
Good advice. Quick question. You
Sure.
used to play in the NFL.
Right.
Who do you like in the Super Bowl?
I like the Ravens. I originally liked the Redskins, but the Giants beat us because our kicker missed. The Ravens beat us because their quarterback threw an interception in the end zone, so I'm going to go with the Ravens.
Eugene Profit, thanks very much for being with us, and thank you for being with us. Stay tuned for more market coverage straight ahead on CNNFn.